afternoon, everybody. My name's Angela Yore, and I'm absolutely delighted to introduce episode number 5 of our podcast, the DigiSec podcast, Takeaway. And today we have some great guests here. So I'll hand over to our guests and introduce Angela to start with. Please introduce yourself, Angela.
Hi, thank you. Yes, I'm another Angela on today's podcast. So, Angela Davies. I work at DigiSec, one of the newer members of the team, and I came on board as head of partnerships for the financial services. So, supporting the banks and the issuers in their wearable journey.
And there's nothing that you don't know about issuance cards from your previous track record.
Exactly. Yeah. So I've worked within that kind of area, and certainly cards has been real, a real kind of, I guess, joy of mine for a long time. And wearables just add on to that. It's another form factor. It's another way to pay, and I do feel that it's coming down the line for a lot of consumers, and it's bringing more options.
Yeah, and we're delighted to have you, Angela. So
Yeah.
it's brilliant to you really enhance the whole team. And Dave, so you please introduce yourself.
Hi, I'm Dave Birch. I'm an author, advisor, and commentator on digital financial services. And actually, I'm also kind of a bridge in this respect because I'm the non-executive chairman of DigiSec, but I'm also a director of Consult Hyperion.
And just to introduce myself, I'm Angela Yore. I'm very fortunate to be a non-exec director of DigiSec, working with the team. Have done now for a couple of years, but also an entrepreneur and own my own public relations consultancy called SCA, which is a fintech specialist PR consulting firm. So let's get on with the issue at hand. So authenticating passive wearables. So, Angela, perhaps we can start with you. Tell us a little bit about this report that was you commissioned, DigiSec commissioned, for from Consult Hyperion.
Yeah, and it was really important for us to get another view on this because actually, when you're very close and deep in the market, in providing the recommendations to issuers, I think it's really important to get that second opinion. And what we felt, and the reason why we actually commissioned the report, is we did feel that there was perhaps a little bit of a mystery still shrouded around wearables and certainly the security of wearables. And a lot of issuers, they would, or certainly actually even consumers in the marketplace, they kind of almost took one of two opinions. They either thought that there was no security and they could tap as much as they wanted, and that would kind of potentially lead to higher risk, or they felt that if we were to adopt the SCA, which is referenced a lot in this report, which is a secure customer authentication, that the journey would be in some way inconvenienced or clunky for the consumer. And we really want to try and kind of explain what that journey is, and what we are having to adopt as a fully certified provider into the banking industry.
And it seems to me, in a way, that consumers are being underserved really with this clunky experience now with cards. And there's only really two alternatives. Well, one alternative is Apple Pay, which not everybody has. And also, we don't want the monopoly being, there. And the issuers want to keep hold of the consumer. So the other option is, and a very good one at that, for that better customer experience, is using, the object of your choice.
Absolutely. And I think that, has to then feed into being, providing not just choice, but a great consumer experience and also the security so that they can feel rest assured that actually, they can be using that device and still following all of the banking regulations that you would expect without it appearing to be too onerous. And very much in the same way that they are using it for cards. So hopefully the report that has come out does outline those points.
Dave, look, you were involved in this report. How important do you think it is to the industry to for us to know this?
To Angela's point about security, I think there's two different things here. There's the industry view, like, we as an industry are responsible, and we have to provide secure products, and we have to meet with all the regulations. And then there's the consumer side of it, because obviously consumers don't care about any of these rules and regulations, other than getting annoyed when they get asked for their PIN at Waitrose or something. But there's another factor coming in here, which is, you probably all saw that story in the newspapers a couple of days ago with the head of the fraud people saying that there's an absolute epidemic of phones being stolen here. And they were saying, people are looking over people's shoulders to get the pins and then stealing the phones and running away with them. So for a lot of people, it isn't just that they can't be bothered to use Apple, although I do know plenty of people who just can't be bothered with it. It's also the fact that people are beginning to think, when they're in a nightclub, when they're on the beach, when they're at the football ground, they don't necessarily want to be taking a £1,400 iPhone out, to buy a can of Coke or something. And so the idea of using a key ring or a bracelet or a ring or something like that is becoming more appealing. And that, even if you put to one side the issues of branding and all that sort of thing. So it is all about security, but there's like different kinds of security. There's the security we have to think about, so the consumers don't have to think about it. And then there's kind of the consumers' sort of expectations of security and how they're shifting. And in both cases, I think what the report shows, what the white paper shows, is that those security goals are all achievable. And also, I think the point is, Angela, it wasn't that we thought there might be some issues with the security. I think it was there was some confusion in the marketplace about what PSD2, SCA, and all of this stuff would actually mean. And of course, the white paper has put all that to bed as well.
No, you're absolutely right. And I think, interestingly, the fraud that is now being reported relating to mobile payments is actually beyond this SCA limits that have been set. So this is real high volume, high value fraud that is actually enabled because of the inherent issue of the mobile phone and the passcode all being kind of the owner of everything and the access to everything. Within a passive wearable, we very much keep the wearable separate to the management device. And by having that separation, if you were to lose your wearable, for example, you still can access your management device, i.e. your phone, to freeze, to cancel, to then perhaps reinstate when you find it in the side of the bath. So you can actually do all those functions without necessarily having everything all on one device and making it extremely vulnerable. And certainly following all of the, again, I know I'm delving back into security and the industry, but by following kind of SCA at the levels of contactless that we do within for wearables, where we are inherently making it a much safer process for consumers.
So am I right in saying, Angela, just to give people the comfort that they need, the sort of key points really are that there are essentially two ways of providing the levels of security that the Commission, that the regulators want. One of them is online PIN.
Correct.
Which means, for people like me, I use a key ring or a ring or whatever all the time. Every now and then I wave it over the terminal in WH Smith and it says, oh, you have to put your PIN in. And actually most issuers support online PIN now, so that's really not a big deal.
It's the terminals, and yes, you're right, and that is being rolled out across most of Europe. It's been mandated already.
Yeah.
We still have a little bit of delay in UK and France, but actually that is really changing fast, and it's expected that will be absolutely widely used, with only very small examples of very within unattended terminals or where there's no PIN pad available, which is why the report does deal with that.
Yeah, but I don't think it's that much of a hassle. It happened to me the other day with my Amex card, actually. I just completely unexpectedly asked me for the PIN. I have absolutely no idea why. Presumably I'd gone over some limit or some check or someone had forced a challenge. I'm a customer. I don't know why. I've been using it for ages. This time it asked me for a PIN.
And isn't that
whatever.
interesting that you said, I'm a consumer or customer, I don't know why it happened, but it did and I got on with it. That's
Yeah.
exactly the same experience that you would have with a wearable. So it's very familiar to you, and you trust it.
But obviously we have to have like complete coverage. So for the circumstances where that doesn't work, what is the other way of solving the problem?
So the second, as we often refer to it, is almost a backup process, is an out-of-band SCA. That's where you're taking the consumer away from the card or the wearable and the terminal, and we would generally suggest that that is via the banking app. So the user would log into their banking app, normally with biometrics or potentially with a PIN. And just in doing that one act, they are authenticating themselves. And that can be either, as I said, via the issuer, or that could potentially be delegated to the wearable provider. And that's one thing that can be achieved through the wearable provider and through their app potentially.
Well, it seems like now that that problem is fixed, and we have been educating the issuers and the marketplace in terms of how easy this is. But we still need to. What's the so what factor? How do we get? Let's talk about some of this fun stuff, and how we stimulate the issuers to see this as a real differentiator, because if I'm on the beach and I don't want to take my phone out and I don't want to take my card out, but I've got my ankle bracelet on or my bracelet on, I'm going to dupe a fraudster because he's never going to know that that's how I pay. So tell us about some of the fun stuff that you're doing at DigiSec. That is going to excite the market to adopt wearables.
Yeah, and you used a really good term there. You said differentiator, and that is absolutely, certainly for the next kind of number of years, we would see that as being a real core selling point for the issuers, that they can actually offer something really quite new to their customers. Whilst we all, certainly within the industry, I think most of us will know about passive wearables, will have seen them, perhaps we use them. Outside of the industry, actually, it's still very niche, and we really need to grow that. The opportunity is huge. Because not people wouldn't, in a normal use case, necessarily only have one wearable. They would have multiple. There's no reason why you wouldn't have a ring for certain occasions, or you wouldn't have a really lovely looking bracelet for other occasions, and a man might not want to have his wristband for his holiday. So there's actually, there's so many use cases. And I think for the banks and for the issuers, to be able to offer that consumer choice, but keeping the consumers close as well. And wearables, we're only talking about it at the moment in the realms of payments. But actually wearables, can be fully multi-serviced, and we can enable access control, but we can also enable real engagement with the end users. So whereas a lot of the mobile payments have kind of taken the consumers away from the banks, and there's certainly been this disengagement, wearables can bring those consumers back in, and with a tap of the wearable against the phone, they can be updated on any promotions, any new kind of cashback offers, any loyalty, anything the issuers or the banks or even the brands actually might want to to relay to their own consumers. They can really start to engage in a much richer way than they would do at the moment via kind of mail shots and push provision of messages into people's phones. So it really does deliver on lots of levels.
So, Dave, you're an issuer. You're working with one of the largest issuers in the world at the minute, and you're looking at the issue that this whole environment is commoditized, and there's no friction in the experience. We've proved that with this report. What would you say to issuers to get them to really look at this as a viable option?
I would say three things really, to be honest. So one is, on the one hand you've got like the conventional, as Angela said. On the one hand you've got the conventional. So let's have a ring, a bracelet, or whatever, and put the payment in that, and that's great. And for some issuers, just giving people the choice of that sort of thing is good enough. Then there's the stuff which kind of only makes your heart beat faster if you've been in cards for as long as Angela and I have. Because to the general public, they don't understand how complicated it is to get the right card details into the right chip, get the right chip into the right inlay, get the right inlay into the right device, and get the right device to the right person, and get it activated by the right person at the right time. That's actually quite complicated. The technology that we've developed takes a radically different approach to that. So we have the ability to load the complex security data that these cards need to work in real secure transactions round at Tesco. We can do that through a mobile phone. So you can walk into a shop, walk out with your bracelet, keyring, hat, badge, whatever else it is you want, and use your own phone to load your own MasterCard into, and actually delete it when you're bored with it and put another one in and do what you like with it. Now that sounds not that amazing, but I'm telling you, it is astonishing to be able to do that. It's an absolute breakthrough. So there's the second part there, which is taking it forward into this new world where people have the choice. But the third thing, as Angela was alluding to, is making it part of an overall more integrated strategy. So the fact is, those chips can store identity just as well as they can store payments. And whether it's your identity or you're putting the chip in, I don't know, a Chanel bag, or you're putting the chip in some Nike sneakers, or whatever, the ability of those chips to store identity as well as money is, in the long term, meaning taking us into that whole kind of Internet of Things, that whole interconnected, bridge between the universe and metaverse and all that sort of stuff. So I would say, you have a starting point, which is give consumers some more choice. If the kids are going to Glastonbury, give them a silicon wristband and load a prepaid card into it. Don't have them waving a 1,400 quid phone around every time they're buying some weed or whatever it is kids do at Glastonbury. Secondly, use the new ability that we have now to do the remote personalization to look at new value chains and new possibilities. One of the things we discussed before, and it sounds like, but this thing like when you get on a cruise ship, they give you a card to go around spending things. Well, that could be a silicon wristband or something much more convenient or useful, which you could load yourself. And then the third thing is really take this more strategic and more integrated approach across payments and identity, because my personal feeling is, in the long run, the identity use cases outnumber on a daily basis. I use identity more times than I use payments. Whether it's getting in through the door, getting into the car, logging onto things, there are more identity transactions every day, and making those secure in an environment. We live in an environment where fraud is completely out of control, and trying to get a handle on that, I think, in the long run, gives them a bigger business opportunity. So that's how I see those three.
How can we get the payments industry to think less about payments and more about overall security and identity? Because as you're saying that, I'm thinking about my experience this evening. I'll go back to my hotel, which is the Citizen M Hotel in Tower Hill. I'll be given a card, another piece of plastic, which isn't environmentally friendly, to get into my room and to get in and out of the door, if in case I don't get back till midnight or whatever. Then when I go to pay for my hotel room, I'm going to have to get out another card and use that to pay for my room, because it's not prepaid. I'll pay on exit. And then I'll go up to the bar and I'll be, probably having a glass of Prosecco, potentially some nuts or whatever, and I'll have to pay again. It doesn't bode at all for a seamless experience, yet we're not able to see us move. Cards came out in the 1950s and we're still using them. Why is that? You two are two of the foremost innovators we have in the sector. What do we need to do to get the market to move before the market is pulled from within their feet?
So cards are still used, and I think partly because there isn't, or there hasn't been, a viable alternative. But I don't think we necessarily see the end to cards, and
No.
we'll always, we've been talking about the end of of cards for probably over 20 years, and assuming everybody's going to go mobile or everybody's going to go biometric and in other ways, and that hasn't happened. And there is still a value of cards from a perhaps a greater depth of branding, for example. But the wearable does offer, and just as Dave mentioned, actually the self-provisioning, the ability for the consumer to make choices about what they want to have on their wearable, to do that in a few seconds via their mobile phone, to add access control, whether that's through, when they are visiting Citizen M on one evening, they can add that to their wearable on that particular instance. When they are checking in, they can add the ability to have potentially multiple different payment options. But so that kind of takes, it does give the not just the consumer, but it takes in a way that it gives the bank the ability to engage with that consumer without it having to be via the card channel. And I think that is going to be quite different, because cards really for the banks for many years has been just a budget, has been a cost. It's been a cost that they haven't been able to avoid, and they've just had to incur every single year. And of course the costs have gone up as the costs of chips have gone up and the silicon. And so, I do think for banks, they've taken on board the virtual cards and said, right, great, we can perhaps reduce our card costs. But most people still want something physical. So if that were wearable that consumer already owned or wanted to purchase themselves because they want to have that choice of wearable, then that would offer an alternative for the banks to give them a physical way to pay, but without it being necessarily at their own cost, at the bank's cost.
And the issuers, most of the issuers are public listed companies, aren't they, Dave? They don't. The bigger issue here as well for issuers to consider now is cards are not environmental at all. Creating, all they're doing is adding to the plastic that we're putting into the environment. And Generation Z care about that. I mean, I should care more than I do, but I was grown up in an era where it didn't matter. Generation Z have been taught it from school about CO2 emissions and things like that. And again, I don't think the issuers are keeping up with.
I think Angela's, for the foreseeable future, I'm still going to want to use cards, right? I can't get the ice off my windscreen with my keyring. I've tried it. And for burglars who want to break into houses, everybody knows that credit cards is the way. Well, in the movies anyway, they use credit cards for that. So I'm not saying we're not going to have cards. What I think, though, is it's the brands rather than the. So in other words, who are the people that want this stuff? I'll pick an example. If I'm Manchester City and I want people to be paying with the Manchester City keyring, not with their iPhone, that's what I'll drive. I'll drive that kind of thing. If I'm the cruise line and I want people paying with a silicon rubber bracelet that's around their wrist instead of cards where 500 of them get lost every single day, it's me that will drive it. If I'm the festival that wants the kids using key rings or something instead of, it's those that will drive it. But we have to be in a position where we can serve the issuers who want to respond to that. And, I think we have, because of the range of products we have now, and because of the comfort that the white paper has provided, I don't see that as being a problem.
Yeah, and I do think from the issuer's perspective, though, you're right that the journey might well be, actually pushed by the brands or by the venues or the destinations. But actually, from the issuer's perspective, they don't want to lose their own customers because they haven't opted into something as simple, as easy as tokenization via passive wearables. To then have their own customers diverting to other payment facilities, to prepaid or to other providers, because actually they haven't done this opt-in. Very soon they'll realise that actually they do need to be involved in this, and ensure that they are offering that option to their customers. But I think there'll be those two options. I think going back to your original very early on in the podcast, Dave, we talked about what's in it for the banks and what would we talk to the banks about? And there are the two different options. There's the banks that might want to stay entirely passive and just say, yep, off you go, Mr. Consumer, you go and choose whatever you want, and you can use your card and attach the account that you have to that particular wearable. But there are others where they perhaps have very specific use cases. We talk about, kids cards or teenager cards where perhaps actually that, the wearable, the wristband or even ring or key fob is so much more of a kind of clear use case and will add much bigger value. There's other cases which we talk about, lots of accounts now are very much delivered for the holiday market and for the travel market. And again, having that ability for that wristband to be a silicone, waterproof wristband that you can wear throughout your whole holiday, a family pack that you can hand out to your family. You don't have to give them your card, to go off and buy a drink from the bar. So you can think about all those use cases and those scenarios. I think we will find that the banks really now still potentially want to own the journey of the wearable, and that'll be quite interesting to see how that pans
Sounds
out.
fascinating. People don't buy what you do and they don't buy how you do it, but they do buy why you do what you do. And the financial services community has never had to worry about that before because they've owned the movement of money. But that's changing now because you've got, the emergence of digital currency, even though, albeit it's in its infancy, there's starting to be some use cases out there. And then you've also got, of course, Apple using the card system, but still, are quite a force with the card that they've just brought out. But we all know that why everybody buys Apple. You don't buy it necessarily because the product is any different from an Android phone. You buy it because the marketing was so good. Steve Jobs said, we're the crazy ones. We're the change makers. So therefore, whatever came out from Apple, the design was so good, whether it was an MP3 player, whether it was a phone, whether it was a laptop, whether it was an iPad, you just bought everything from Apple. What marketing advice would you both give to issuers to say to them, people don't buy what you buy anymore, they buy why you do it? So how can issuers get on that journey?
Well, I would say I'm absolutely not one to understand anything about marketing for issuers. That's a really difficult thing to say. But I think Angela was pointing to it earlier on when she said, what we can do. If you've spent your entire life marketing cards, it might seem a bit odd to start trying to market key rings and watches and hats and badges and bracelets and so on. But actually, that's where we're going. So I think in the first instance, to get started, it's about marketing those choices, and I think giving more choices in that space will get us going. But I do sort of really think it's the brand growth that's going to drive it with them. I'm just not sure the payments people kind of see things in that way.
Yeah, I think it will come from, and probably this is quite typical. Really, it will come from the brands of the consumers and saying, this is what we want. And why will they want it? Is as soon as I think as users of wearables, it does come down a lot to the convenience. So we talk about choice today and security, but actually convenience is just so key here. And what you do find is anyone who has used a wearable a number of times immediately is on board with that convenience. And of course, if you are the bank behind that wearable, in terms of then you're ultimately going to be associated with that convenience from the consumer's perspective. So immediately there's kind of an element of goodwill and kind of I suppose satisfaction. So I do think it is such a great user experience, and that's what we've been trying to get across to the banks, is that the user experience is fantastic, the security is great, and in no way compromised. So actually, why don't you offer it? Because there can only be a positive that comes out of this. There can only be a positive that actually the consumers think it's great, love it, and will potentially use that particular card. But in the card industry, it was always top of the wallet. That's what everybody talked about. How do you get your card to be the top of the wallet? Well, I don't even get my wallet out anymore. I use my ring. So actually, the fact that that is attached to, and I will say the word, it is attached to my Curve account, means that Curve are getting all of my transactions.
All right. Well, I think there's some key takeaways there, as our podcast is called, takeaways, some key takeaways for the issuers. What would be your number one takeaway from today for them?
Don't worry.
Don't worry. I love that. That's so, so true. Like, be brave, get out there,
absolutely.
believe.
Yeah.
And yours, Dave?
Well, my key takeaway is that the provisions of PSD2 for 2FA, SCA, whether OTP or... No, actually, I'll just summarise it. Don't worry. Angela was right.
Let us deal with it. Let us worry. And we have done, and we've set it up so that it works perfectly.
It's amazing. Thank you so much, both of you. It was an absolute pleasure.
Thank you.
Thank you.
Thank you. Thank you for listening. Please share, like, and engage with the posts we're going to put up regarding this podcast. Thank you. Bye.